Good morning, everyone. This is Financial Literacy 101. Today, we're going to have just a stock talk, okay? We're going to talk about Tesla, Apple, and the infamous and famous NIO. Now, I'm going to start off with Apple, okay? I'm going to start off with Apple because Apple is doing pretty well this morning. I thought they were going to go down. I came out yesterday and I thought Apple was going to trickle down to probably anywhere from 124 to 120. But Apple has proven me wrong, which is great because I put extra money inside of Apple. So I'm actually happy about that because Apple is now making us all some money, which is always good. So that is always good to know. So as I'm looking at my Robinhood account, Apple is up almost 2.5%. So let's go over there and let's see what is really making Apple what's making Apple perform, because when I move to Tesla is expected not to do so well. There was an analyst from France on there talking about he believed that Tesla is not going to do so well. I'm trying to figure out why he, actually thought that. And then we're going to get into NIO and why did I sell NIO today? Why I sell NIO? Usually I tell you guys, hold on to your love. But I sold NIO because NIO has lost a lot due to them selling off 75 million, I think it's 75 or 85 million shares of ADRs, those American Depository shares. They're really trying to get more money. In very layman's terms, they're trying to get more money to start their autonomous vehicle section, okay? Good morning, Charles Green. Good morning, Nolan Baptiste. Thank you for joining us, gentlemen. Thank you for joining us. All right, let's look into this. So right now, we're looking at Apple. Let's blow this up a little bit. And we got quiet in the room. He said, should I buy Apple or anything that's going on? Apple is going to be a long-term buy. You should really invest some money in Apple. Now, quite frankly, as you can tell right here, I'm having issues with my Robinhood. It says unsuccessful HTTP response. So I'll be trading from my phone today. Okay, guys, I'll be trading from my phone today if I do any trade. So what I'm really thinking about doing is actually, okay, I know I'm on Apple, but let me take a moment here. Actually, just waiting to see how NIO is going to perform and then buy NIO tomorrow. I want NIO to actually drop to $16, okay, because I made a great profit off of NIO, and when the market went live, I sold NIO, okay, I sold NIO. Charles Green said, I'm still holding on NIO puts, okay, and then we have Charles Harding said, I have problems with my phone on Robinhood too. Well, Charles, I have problems on Robinhood on the desktop, not on my phone, because that's why I had to make my transaction. All right, so anyway, we're going to do a regular review on Apple. So for any viewers who are not familiar with trading Apple, you might have an iPhone, an iBook, or iMac, or MacBook, or Mac Pro. I'm a Pixel man. I like Google when it comes to me using products and investments as well. But when it comes to investment, I like everybody, okay? Either you're going to do options, puts, or calls, or you're going to invest for the long or short term. All right. So look at this trajectory right here of Apple performing, okay? Again, before I even get to this little mark, I know it's in March and April. There we go, okay? Apple dropped down to now, again, This is based off the 4-to-1 split, okay? Because we understand that Apple on Friday closed around 500, okay? They closed around 500. So now, now that they did the split, now they are accounting for that. That's the math you see here. So we'll just go off these numbers not to confuse anybody. So, of course, during COVID-19, when it first occurred, pretty much every stock in the stock market dropped. But other than that, Apple has been doing great in their business model. And here's another thing. If you saw my review yesterday, how I broke down the information, how Apple, this is their 5th stock split. And Apple is a company that's operating not out of debt, okay? They have surplus revenue. They have surplus capital. They are a phenomenal company to invest in. And they can do this all the time and get away with it because, quite frankly, if Apple did not split them many as times as they did, one share of Apple would be $28,000. Now, some of you, when Apple became public, I believe Apple became public in 1980. And some of you are saying, well, I bought shares then because you like whatever you liked at the time. And you got 300, 400 shares of Apple. And you would wish they would stop splitting the stock because you're like, hey, look, hey, 28,000 a share. I would have been a rich man by now. I would have sold that out and bought me a house in the Bahamas or somewhere. And I totally understand that. All right. So 5 years, they was up 356%. I like to round up. So 1 year out, 147%. 3 months. 59%, 1 month, 15%, 1 week, 2.37%, and today Apple is up 2.26%. And this morning, I bought some shares of Apple. Okay, I bought some shares of Apple. It says that my average cost is $220. So right now, I only have 1.8% shares. And I tell people, you have some residual money left in your account when you're investing. Come up here and change the invest in. Don't do shares, okay? Shares, you have to buy an entire share, but you can change this to dollars and do fractional investing, which is absolutely phenomenal, okay? Which is absolutely phenomenal, okay? So, quiet, I was going to tell you, yeah, I would definitely buy Apple. That is my opinion, okay? I want to make sure when you guys lose or win money, it's not my fault, especially when you lose. All right, we won't really get into this. I read this yesterday. Let's put it this way. Apple engages in the design and manufacture and sales of smartphones, personal computers, tablets, wearables, and accessories, and other variety of related services. And then it operates through, North America, South America, Asia, Europe, you name it, Australia, India, they're everywhere, okay? Because everybody loves Apple products. It was founded in 1976. CEO is Timothy Donald Cook. Their price earning ratio is 38, okay? Price earning ratio is 38. And again, you can look on my channel if you want to break down what the price earning ratio is and how that relates to a stock, okay? And also your EPS. I love to look at that once we go over to Market Watch. Their dividends yield is a measly 0.63, which is not even $1. I think it's around 80 cents or something, okay? 52-week high is 128, and 52-week low is 51. Again, this is based upon the 4-to-1 split. This is based upon the 4-to-1 split. Their collections, computer hardware, 100 most popular stocks, computer software, electronics, technology, consumer products, telecommunication, and retail. Some of the headline news, this is based off CNBC. Stocks merging the biggest movements in the pre-market are Honeywell. Honeywell, they do a lot of, I know some of you probably have like the Honeywell thermostats in your homes. They're getting to smart products as well. Jen, Salesforce, Apple, GE, and more. So we'll stick strictly to the blueprint here. We'll talk about Apple. 6 hours ago, the New York Times, we're talking about Apple, Tesla, bid up ahead of share split open. See, I was telling you guys, Apple stock rallies as 4-to-1 split set to take effect. Okay. Now, analyst ratings off of Robinhood, we got buy at 67%, hold at 23%, sell at 10%. I'm not going to really read the bears today. I don't think that's pertinent today. I'm going to read what the bulls are saying. It says, between greater smartphone penetration and emerging markets and repeat sales to current customers, Apple has plenty of opportunity to reap the rewards of its iPhone business. You guys remember when Apple was purposely slowing down their phones? Their claim to fame was, oh, we are trying to save the phone, essentially. But we didn't let you guys publicly know that we were slowing down your phone to help save your body, to help save the microchips and processing chips. Okay, Apple, we understand that a lot of these technology companies, they could be good companies, okay? A lot of you love your Apple, you love your Google, you love your Samsung. I got it. But they do things behind the scenes to mostly save money and to earn more money, believe it or not. Yes, they don't become big and powerful and rich because they just play by the rules every single time. No. Apple's iPhone and iOS operating system have consistently been rated at the head of the pack in terms of customer loyalty, engagement, and security, which bodes well for long-term customer retention. We think Apple is still innovating with introductions of Apple Pay, Apple Watch, Apple TV, and AirPods. Each of these could drive incremental revenue, but more crucially help to retain iPhone users over time. And don't forget, when they bought out Dr. Dre for Beats, that actually helped the Apple brand as well. Now, when we get into the quarterly earnings, we understand that everybody was up Q1 mostly. And as the coronavirus hit, most people declined in stocks. And Apple moved sideways on their Q3 earnings, but Apple is still a solid stock, okay? Here's pretty much my movement. As you can tell, I've been buying and selling Apple for a while. And people in that arena bought Netflix, Amazon, Facebook, Microsoft, because essentially we're kind of in the FANG stock category. The FANG is kind of like bleeding out. Have you noticed that people don't really talk about the FANG, which is Facebook, Apple, Amazon, Netflix, and Google? Okay, so these, Microsoft is kind of moving in the FANG stock category. I don't know how they're going to rename that acronym to help them out. But anyway, let me get off a second here. Let me go and pop up Market Watch for us so we can head over there and break down Apple just a little bit better. So if you guys are investing in Apple, you can actually see your dividends, hard-nosed dividends, when we're talking about Apple. And believe me, I don't believe it's going to be no more than 80 cents, 90 cents, somewhere around there. You're not going to get a lot of money for your Apple when it comes to your dividends. Now, growth potential is paramount because they are still a company that's growing. Okay, I'm waiting for Apple to get into Apple smart cars because everybody is going to electric vehicles, ladies and gentlemen. Everybody is going in electric vehicles, okay? So let's look at this. All right. So the 52-week range is $51 to $28. I love reading that. Their market cap is $2.13 trillion. Okay, their public float is $17.09 billion. And then we get down to the EPS. Yes, 3.29. Apple is doing phenomenally well. They're definitely a company not in debt. But again, that's not a deterrent if a company is operating out of debt or not. That just means they owe a lot of investors money. Okay, that's pretty much what it means. Now, dividend date, that means that, they're down at 20 cents. From the stock split. Now, before the stock split, they were at 80 cents. Now they're down at 20 cents. So basically, when you had the 4-to-1 stock split, if you had one share of Apple, that one share turned into 4 shares. And so they also divvied up. Because think about it, 20, 40, 60, 80, 20 cents, basic math. So it was at 80 before the stock split. So that's what I was thinking about. All right. So you're not getting a lot of dividends for your Apple, but if you had shares of Apple, you're getting the same dividends, and that paid you out on August 7th. So hopefully you had like 1,000 shares so you can really see a little bit of money in your account. What else is pertinent with Apple today? Stocks missed a strong August win. Apple stocks first trade on NASDAQ at 930. Split adjustment. Okay, we're up. Apple stock surges 2.1%. Look, all these, as I was telling you, I told you guys last week, this was the time to buy. Okay, this was the time to buy. Now, mainly I talked about Tesla, but I also told you Tesla will have a slight decline, just like I told you Apple, because usually the valuation of a company doesn't changes, but they have those market correction days, they have those pullback days, they have those flickers where they go down a little bit and then pop right back in. Okay. All right. What else do we have here that's pertinent? Apple Epic Battle. The Seeking Alpha came out on the 31st, which is today. Amazon orders. Woo! Look at this right here. Amazon orders 1,800 electric vans from Mercedes-Benz. Okay, I'm gonna have to do a little more research about that because Amazon gave $700 million to Rivian, and I'm pretty sure that was to buy into their platform. And I don't know why they would be buying 1,800 electric vehicles from Mercedes-Benz. Maybe they're trying to fill up a market space in a certain area and they can't wait for Rivian technology to be transferred over to their basic truck. I don't know. I'm just speculating because I'm trying to figure out why they did that, especially when you almost put $1 billion inside of a company, a startup company. Okay. All right. I'm going to read some of you guys' comments here. I'm not ignoring you guys. And then we're going to move over to Tesla. So give me a second here as I set up for Tesla, and we're going to go over Tesla because Tesla should be down today. Tesla should be down. And good old Robinhood is proving me right again. Oh, there we go. It popped in, then it popped out. All right, here we go. Here we go. Give me 1 second, ladies and gentlemen. Give me 1 second. Robinhood need to improve this platform. You got all these people investing on here. All right. Okay, let me read some of your comments here. All right, who do we have in the room? Okay, good morning, Nolan Baptiste. Thank you, good sir. Roberta Brock, good morning. Charles Green. Big Uzi, good morning, good morning, good morning. He says, I have a share Walmart. I want to sell it to buy Apple. What would you do? What would I do truly? This is personal me. This is not stock advice. This is what I would do. I would sell Walmart. Now, granted, Walmart may come up with some innovation and their stock go over $100. I don't know what Walmart is right now. I haven't been tracking Walmart, but Walmart is, when it comes to investing, they try to really keep their stock over $70. Now, you're going to make me look into this really quickly because that's a really good question. Let's see what Walmart is. Oh, they're well over 100. Okay. I thought they was like at 80. That's the last time I checked Walmart. I don't know. Now that I'm seeing this, let me look at the analysts. What they're saying. 6% sale, Walmart. Walmart has been doing good. Let me show you guys what I'm looking at. Look at this. Walmart has been doing good. No, keep Walmart. Keep Walmart. And, dig in your pockets, get some crumbs, get some pennies, get some lint, and invest the other money that you have in Apple. Walmart is doing good, man. I'm pretty sure Walmart's paying dividends. Yeah, Walmart is paying dividends at 1.5 cents. We'll see. I think Walmart ticker is WMT. Is that Walmart? Walmart. Here we go. What do their dividends really pay at? EPS, okay, $6.27. So Walmart is also a company now operating out of debt. You get $0.50 for your stock. Okay, I mean, it's nothing big there. We all would know Walmart. We're not doing one, but yeah, I would keep Walmart. Okay? I would keep Walmart. But anyway, let me get back to your notes so we can move on to Tesla. Penny Stock Investor, thank you, kind sir. If anyone in the room, if you would, go ahead and give me a thumbs up, thumbs up, thumbs up. If you're not a subscriber, I encourage you to subscribe, where every morning I do stock reviews, and throughout the day, I might get a wild hair and do videos about social injustice, equality, economics, or I just may teach you how to buy a house. Who knows? But later on, guys, stay tuned, because right after this, I'm going to come right back on, and we're going to break down my video I did. Now, unfortunately, I apologize to the viewers yesterday. My music was way too loud. I was really trying to bring in the mood of really about talking about houses. So I'm going to go over an old video that I did. So stay tuned if you're in the market to buy a house or you're in a house, and I'm going to break down some of these good things. All right. We have M. Lincoln. Good morning, good sir. We have DJ Cool. He says, how can I buy the Apple shares and what are the steps I need to take? Well, quite frankly, DJ Cool, in the description of this video, you will see a link for Robinhood and you also see a link for Webull. Just go ahead and open an account. It's totally free. And when you sign up with one of the two, you will receive a free stock on either platform, and then you can start investing once they approve your account. Okay, it's very simple. They will walk you right through the process. Again, those links are in the description of this video. Mr. Smith, good morning, good morning, good morning. We got Mac Peoples, good morning as well, and Maddox. Hello, team. Nice to see you today, Maddox. Haven't missed you guys. Okay. All right, let's move right along into Tesla. Okay, I won't kill the nanny on this one. I won't kill the nanny on this one because we all know about Tesla. And you know what? When Tesla first started out today, they dropped. Okay, they dropped. They were down almost 1%. And so Elon Musk, he's a guru, he's a beast, he's a maverick. He called up the SEC. He said, hey, listen, don't play with my money. Don't play with my money. Because now Tesla is up, going up almost 5%. I got a wild hair, guys. You know, when I get a wild hair, I might just want to invest $1,000 in Tesla. Yup. I might do it. It's up 5%. Okay, I can't wait. 1, 2, 3. All right, let's see if Robinhood lets me do it. Look, see what it does? Now I'm losing money because Robinhood needs to fix their platform, but of course they probably blame me, and I invest with these guys all day. So I'm going to Tesla. Where are you at, Tesla? There you go. And I'm gonna trade. I'm gonna buy in dollars, and I'm gonna invest $1,000. Okay. I'm investing 1,000, review, swipe up, okay? I'm investing 1,000 in Tesla because now Tesla is at, boom, Tesla is 5.33. Let's look at that $1,000 investment, okay? You see that? Let's see here when it should have went up a little bit more than this. Did it just compute? I think it did. Let me refresh just to make sure. We should have looked at the numbers before I actually put $1,000 in there. See what I'm actually trying to do? I'm trying to keep $2,000 in my account so I can actually buy more NIO. All right, what are we looking at right here? Okay, portfolio diversity. Let's see where Tesla's at. So Tesla, I'm already, look at this, ladies and gentlemen. Today's return, I'm already up $63. But again, I tell people, look at your percentage. Look at your percentage. So would I love to see anything over 20%? I love to see anything over 20%. And some of you may have stocks that you are getting 7%. That's still good. That's okay. 10% is excellent. But when you get the 20% of a return, it's absolutely phenomenal. I don't want you guys to focus on this. That's too easy to focus on how much money you made. The money is in the percentages, okay? The money is in the percentages because when you start looking like, oh, 7%, I made $2,000, but it took you 10 years. But when you're talking about I'm at 20% and I just invested this 2 weeks ago, then you're talking about real money very quickly. Okay, don't sell drugs on the street. Sell and trade stocks on the market. Okay, that's where you want to put your money at. Don't matter if you work at Burger King, Popeyes, a secretary at an office. You are a medical assistant doing records. This is how you actually even the playing field of people making more money than you. Okay, they laugh at you when they go through the drive-through. You got the sweaty hat on, you're sweating, but you got over $100,000 in investments. Okay, they don't even know that while they're trying to pay for all their bills and their fancy houses and cars. Let's get into it. All right, don't forget that Tesla was up. I think it was what, $2,000. I think it was two or 3,000 before the 5-to-1 stock split. Apple did a 4-to-1 stock split, and Tesla did a 5-for-1 stock split. But let's look at this. Of course, this is in March, COVID-19. But other than that, look at this, ladies and gentlemen. Over the past 5 years, Tesla has been up 848%. Should I say it? Okay. For the viewers who don't know, I used to own over 100 shares of Tesla, about 200 shares of Tesla. I bought it at 200 and I sold them at 500. And they went up to 2,000. I'll leave it right there. You do the math. All right, 1 year, they was up 938%. 3 months, 166%. 1 month, 58%. 1 week, roughly 18%. And today, they're up over 5% already, okay? I'm making decent money. I only have 2.6 shares, even though I still have a lot of money right here. Okay, let me refresh this again. I don't think this computed. I should be up a little bit more than this. Did that trade take actually? Let's see if this trade. Let me look at my messaging real quick. Look at this. It don't have me as buying Tesla. Look at this. This is crazy. This is what I'm talking about. We all saw it on here that I bought Tesla. Okay. Oh, now on the phone, this is what they see. They give you different options on the phone. We are experiencing high traffic. You can still place trade, but other functionality may be impacted. That is what they're saying, ladies and gentlemen. That message right under here. Right here. That's what they're saying. So they said we can place trades, so I'm just going to leave it right there. Hopefully I'm not losing money. And we're going to go on with the stock review. But okay, let me just say this, and I'll leave it alone. Robinhood, if you're listening, you are a major platform for novice, intermediate, and expert trading because you spearheaded the no commission price. You spearheaded giving a stock for free when signing up. So with that being said, your platform is going to grow. Robinhood, you have increased your platform. You have upgraded your platform for fractional shares. You've done a lot of great things in this space. I'm going to go ahead and tell you, you're going to need some more cloud space. You're going to need some more cloud space, Robinhood, because this should not be a thing. Because as an investor, it hurts me to not see my money being invested when I invest it. That is how you lose clientele, Robinhood. Okay, I'm done. All right, Tesla. I won't read too much of this because we already know about Tesla. Tesla engages in the design, development, manufacture, and sale of fully electric vehicles, energy generation, and storage system. You know, they do the solar panel roof. It looks like a regular roof, and they do solar panels. I would love to have that, but I can't afford it. That's just too expensive. All right, we know who the CEO, okay, Elon Musk, employs 48,000. Their headquarters in California, founded in 2003. Price earning ratios at 1.17K, and their average volume is around 90 million. Their collections, manufacturing, 100 most popular stocks, automotive, transportation, road transportation, and energy. Here's the headline news. Puzzle rearranged, splits to top Apple, new additions to DJI, grab early focus, whatever. Workhorse stock jumped after strategic agreements with Hitachi. Now, who gave me some information on this? I believe it was Clan Killer. Clan Killer is a subscriber of mine, comes on all the time. And I believe he gave me information about Workhorse, and I know he's investing in Workhorse. You guys may want to look into Workhorse. I believe I did a stock review. You might have to go through all the stock reviews I do. I know it's quite a bit, but you can just go on YouTube and type in probably Ross World or Financial Literacy 101, and then type in Workhorse stock review if you want to get that information. All right, NIO stock sinks on heavy volume after upsized ADS offering prices at a discount. We're going to talk about that, okay? Woo, look at this right here. Now, you know my rule, guys. Buy is at 20%, hold is at 43%, and sell is at 37%. I never really buy when the analysts are saying 37%, but they were expecting that Tesla will go down, and that's why they're saying sell. We understand that these ratings can change daily, weekly, they can change. But Instead of doing the bulls on this, we're going to do the bears. Let's talk about the bears. And we understand that the bears, they always looked at the market is going down or stock is going down, and this is the reason. Versus the bulls, this is why the market is up. This is why I believe this stock will do well. So the bears are saying investing in Tesla carries tremendous uncertainty. The market has high expectation for the stock. So a slowdown in growth, execution problems, or lack of capital could lead to a severe decline in the stock price. The acquisition of SolarCity and Elon Musk's recent erratic behavior adds uncertainty. The stock has massive key main risks. Mass EV adoption by consumers could be many more years away than Tesla expects. If demand does not materialize, the company is likely to struggle to recoup the cost of its gigafactories. Audi, BMW, GM, Mercedes, and others are no longer ignoring BEVs. Okay, so let's move on. What else do we have? We have the quarterly earnings. They were up Q4 of 2019. They slightly declined Q1. Now Q2 2020, they're up. I wonder what I will be seeing Q3 from Tesla. Here's some of my major movements. It says canceled. What does is canceled mean? Look at this, guys. Entered amount and it says status was canceled. This is what I'm talking about. That's so frustrating. People also bought Apple, Amazon, Netflix, and Microsoft. Now that they canceled the order for whatever reason, and you quite frankly see the money in my account right here, $4,100. Now they're up 5.38%. I bought it at 4.9. So since that order was canceled and there is no information, and every time I put in $1,000 here, okay, which gives me 2.1, you keep seeing some sort of error here, unsuccessful HTTP response. I don't know what's going on right now, but I know that I'm moving out because Tesla is actually doing pretty well. So again, I'm going to try one more time and then I'm going to leave it alone. I'm just going to have to miss out because again, I want to keep $2,000 inside of my account to buy more NIO. Now, unfortunately, I'm going to tell you a mistake I made with NIO and you guys are going to laugh at me because NIO is already back up at 18% and I sold NIO at 17%. Thinking that NIO is going to go at 16%, so that was my fault. So if you kept your NIO shares, good for you. If I go back into NIO, I'm going to pretty much cry. So anyway, as I'm looking for Tesla here, I'm trying to buy in dollars, again, $1,000. Review, swipe up the trade, up, swipe up. Then it says order canceled. The market order to buy was canceled. Amount invested. I don't understand this. Anyway, let's go over to Market Watch and let's type in Tesla and get through this because I am getting frustrated, as you can tell, because good old Robin Hood. Let's break it down. So Tesla in the past year went from $44 roughly to $466, okay? And they're a company, EPS, operate out of a profit right now because usually Tesla's always operating out of debt. They're not giving any dividends, and it says Tesla stock split 5-for-1. What that means for investors, we already went over that. This means for every one you get 5 total, not 6. And that's pretty much it. Okay, let me read some of your notes and then we'll head over to NIO. Okay, we'll head over to NIO. All right, let's look into some of what you guys are commenting on. Where are you guys at? All right. We have Lady Luck. Good morning, Lady Luck. Good morning, Jermaine Anderson. Good morning, Thorough. He says, yes, I'm putting 1,000 Tesla as well. We have Jermaine Anderson saying, good morning. Jermaine Anderson also said, will you ever break down the value of fractional shares? I can do a video on that. But quite frankly, the value of fractional shares for me is for investors who have residual cash, residual amounts of money, and you want that money invested. Because say, for instance, we went over Apple and Apple was $127. Let's say if you had $50 of Apple, you have $50 that you wanted to invest, you can go in at $50 and invest in Apple. And they're going to break down the math for you in those fractional shares. Be like, oh, because you invested $50 in Apple at 127, you have 0.41237 shares of Apple. Either way, you're still earning money off those fractional shares. Okay. All right. What else do we have? It says, Lord DC, wait, what happened? Okay. Clementa Roberts said, how are you doing today? Good morning, ma'am. Thank you for joining us this morning. Then we have Maddox. He says, I did try on the phone. I'm still having issues. Nolan Baptiste said, GameStop has a fair number when it comes to stocks. Okay, now we're moving on to NIO. Everybody loves NIO. I love NIO. You love NIO. But NIO don't love me today because NIO, unfortunately, I sold NIO around $17 today. And unfortunately, NIO shot back up to 18. And usually I'm one of those investors that loves to hold on. I love to hold on. So let me share my screen with you guys. So NIO, now, as you can tell, when it came out the gate, NIO was at around $17.10. So I'm going to go over the time chart, and then I'm going to go show you the transaction I made. So NIO became public. Its IPO was released. Initial public offering was released September 12, 2018. So not even 2 years old yet, okay? Not until September 12th. And so when NIO dropped down to 11, okay, on July 17th, that's when I really bought a lot of my shares. August 7th, and here we are. Here we are. They're now 18 because we go to 1 year. They've been up 540% roughly, okay? 3 months, they've been up 345%. 1 month, they have been up 41% roughly. 1 week, they've been up 19%. And then today, they've been down 2.59%. But here's the ticker. I only have 0.2% shares, and I'm gonna show you my transaction. I'm gonna show you my history. Now, for a lot of you who don't know what NIO is simply a Chinese electric vehicle company has been doing fairly well. Okay, been doing fairly well. I'm gonna go back up here to show you something so you guys understand. So look at this. Look at this. If you would have invested in NIO in March, early March, second week of March, at $3 a share, and look at NIO now at $18. Some of you had about $500 to actually invest that money inside of, and I know you wish you did. All right, so I was looking at my costs. I'm only up, look, it says total return here, up $108, which is only roughly $2 because I sold my shares. All right, I'm gonna read this a little bit of this. It says NIO is a holding company which engages in the design, manufacturing, and sale of electric vehicles, driving innovation in next generation technologies in connectivity, autonomous driving, and artificial intelligence. Now, autonomous driving, NIO is doing a lot of things. They're giving away certain shares of the American Depository so they can increase their revenue to actually invest more money into autonomous driving. We need to understand NIO is the Tesla of China, and they're modeling a lot of their business behind Tesla. Okay, here's the CEO. I don't want to butcher none of these Asian men names, so I'm just going to leave it as that. Okay, it was founded in 2014. Their collections, consumer products, 100 most popular stocks, most popular under 25, road transportation, retail transportation, of course, Chinese. NIO trades down after EV company prices upsized equity offering at a discount. NIO shares fall after company announcements offering of 75 million shares, okay? 75 million shares. We're going to actually get into that story. The analysts are saying 23% sell. 23% swell, hold at 45, buy 23. Here, their earnings, they've been doing great. Look at Q4 to Q1 and Q2. Up, up, and up, okay? Now, here's my history. Look at this, look at this. I sold my shares this morning. I love to be transparent. Here's the amount that I received. That's the $4,100 you see in my account because I sold literally all my shares of NIO. And unfortunately, I sold them at $17.31. If they don't drop down to $17.30, then if I buy in above 1731, I'm going to count it as a bad investment, even though I made tremendous amounts of money off of NIO. I made around, out of that 4,000, I only invested like 1,000. I only invested like 1,000. Let me see some of my, let's see here. There was some options I bought here. See, option expiration date. That's not good information. Of course, we talked about Workhorse, Electromechanica, Nikola, Blink Charging. Now, these three right here, ladies and gentlemen, are also electric vehicles. Workhorse, electric trucks, Nikola, electric trucks, Electromechanica. You got to look into all those electric vehicles. As you can tell, they're doing absolutely phenomenal. And look at Workhorse. Look at Workhorse. Now, a lot of you are having problem with trading on Robinhood, and I'm going to get into Workhorse today because, as you can tell, they're blowing up over there. They're blowing up at 13%. Again, I want to put this into context, okay? So you see I sold it at 1731. We're looking right here, 1731. And I sold it this morning right before the market opened. Now, so I come back up here, I only have 0.2%. Average cost $8.64 at a profit of roughly $2 at 109%. So if I look at today, I can't buy this now, in my opinion. Now, granted, if NIO pops and continue to teeter around $18, I'm going to go ahead and invest in NIO because we understand that NIO is going to hit $20. NIO is going to hit $20, ladies and gentlemen. It absolutely will. It absolutely will. Now, I didn't think that NIO was going to drop down to 1731, then pop back up to $18. Look at this. This is ridiculous. So this was a bad investment. This was a bad trade, not a bad investment. I take that back. A bad trade on my account. But again, I make these mistakes so you don't have to. I like to. I'm the guy teaching you guys don't do these mistakes because I am considered a safe, risky investor. What does that mean? Some things I'm just really safe on, like my index funds that I do with Webull and I do with Vanguard. I'm very safe. I just invest and leave it. When it comes to certain Webull stocks and Robinhood, I do a lot of risky investment, and that can be costly. Let's look at my portfolio really quickly before I get into Workhorse, okay? Now, when it comes to, let me go back. Let me go over to Market Watch because I did promise you guys I'm going to do a regular stock review for the new viewers who are not familiar with this platform and how I break down a stock. All right, the 52-week range. Look at this, ladies and gentlemen. Some of you are saying, man, I wish I would have invested in NIO when financial literacy told me, because I told you guys when it was around $3 to invest. But I wish I invested at $1.19, because it went all the way up to 20. And this is why I say I'm still going to buy NIO tomorrow. Now, I'm expecting it to drop, but it could go up to $19 again. But nonetheless, I'm going to invest in NIO again. So I'm going to keep at least $2,000 and see how much I can make off of that. But they've been up in the 52-week range, almost up to $21. All right. Of course, like most electric vehicle companies, they are a company that is operating out of debt with their EPS, earnings per share, at a negative 1.15. Okay. And again, NIO sales stock, shares fall. Here's your trading guide for potential. That's your headline. Let's go back over here to my portfolio. This is what I'm doing today. This is what I'm losing. I'm losing right now 2.81%. That is roughly 292. When I'm saying I'm losing, it's not, I mean, most of you are saying you're losing money. Again, I'm not losing money. I'm losing appreciation of my portfolio because I'm not going to sell anything right now. Right now, I'm in the market to buy. But thanks to Robinhood, whether you're doing it on the phone or the desktop, they're not trading any of my shares with all this money in my account because I absolutely want to buy 1,000 of Tesla. But let's get into Workhorse. Get into Workhorse. Before I move on to Workhorse, I'm not going to do a full breakdown of Workhorse, but remember we just looked at Workhorse and it was at 13%? How many shares do I have of Workhorse? I only have 6 shares, and I'm only up 6%. But today's return is up 13%. This is ridiculous. Usually you can come down here and see to the news, to the headlines, to see why Workhorse is doing good. What does Workhorse Group debt look like? That's not what we're looking for. Workhorse stock jumps after strategic agreements with Hitachi. That is what jumped this stock. And it may go all the way up to 15% today. Let me see if Robinhood, let's see here. Is going to let me do it? No. They're still having issues. So there's a lot of investors that's mad. If you're having issue with Robinhood like I am, and you have this money, your available buying power, then you must be upset like me. All right, let me read some of your comments, okay? And if you guys are still around right directly after I get off here, about 10 minutes, I'm going to come right back on and I'm going to break down a video about house buying. So if you guys are investing, I hope you guys are looking at houses or you have a house, but we need to talk about the associated cost of a house. So if you have the time, whether you're at work, looking at your cell phone, whatever the case may be, please come back and join me when we break down and talk about houses, okay? So let me see who I did not cover already. Ron Beck says, what's your thoughts on Blink charging? Got 100 shares, but down about $1 a share. And then Donovan Williams says, I'm learning so much from the channel. Thank you. Well, thank you for joining us, Donovan Williams. So subscriber said here, Ron Beck, talking about Blink charging. Now, Blink charging should be in the category of Workhorse. Let's see if they're down here. Blink charge, yep, right here. Now, it depends on where you bought in at Blink charging because let's look at their 5-year tenure. They shouldn't be that old. Okay, exactly. They're only 2 years old, going on 3 years. At their peak, they were up $7.08. Their peak, there was at 11, almost $12 a share. Now they're down to 7. You have 100 shares. Let me ask you, are you plus or minus on your earnings? Are you plus or minus? Okay. Workhorse is killing it right now. Again, ladies and gentlemen, when you are investing, a lot of times when you see that a stock is killing, I like to ride a wave. That's what I call it. But it's risky. It's risky because when a lot of people are riding the same wave, that stock can become overbought. Okay, and the valuation is now overvalued. Overbought can sometimes mean overvalued, meaning you're going to have a pullback during the same trading day. During the same trading day, you can have a pullback. So that can, at the percent that you bought it at, you can start seeing that tick down. Now, as investors become more solidified in the decision of that company, it can boost her back up. Now, as we're looking at Workhorse again, can you see that they're ticking up and down? See, they were up right here at $18. They dropped down to, let me see here, $18.79. They dropped down to $18.27. Now they're at $18.74, and now they're on a down tick. Now, I wish that Robinhood would let me see the candlesticks. When I do the expanded here, I love looking at the candlesticks. Let's look at the week here. Let's get some lines going. I love looking at candlesticks what they don't do on their desktop platform, but they do it on their app. And just for you guys can see exactly what I'm talking about. Let me show you here on my phone. And I hate the fact that I love investing on my phone with Robinhood versus the desktop. But let me get into Workhorse. When I'm talking about candlesticks, guys, let me blow this up. Let me see. Can I flip this around? Does that flip around? But when I'm talking about candlesticks, you see this? These are the candlesticks. Usually I kind of do a 3 to 4. Now, I'm going to try to bring this in really close. You see those 3 tickers? Usually 3 to 4 tickers. Most stocks go on a downtrend and pop back up depending on what's going on in the market. Now, that's a very rudimentary way of looking at an indicator for investing. It's rudimentary, meaning like, okay, I'm just waiting for 3 ticks for green, 1, 2, 3. Now let me sell or let me buy. And then that's mostly for day traders, but it's so much more than that, okay? As we're looking at this over here, we're looking at the estimated movement average, the volume. We're looking at all the wildest RSI, which is the relative strength index. We're also looking at the regular index. So there's a lot of things that we're actually looking at, ladies and gentlemen. There's a lot of things that we're looking at, how the stock is performing. Then as you can tell, this workhorse, before they made that deal with Hitachi, they were going down. And good, solid companies, they know how to continue to make deals and investments in order to keep their company doing this. And that's why I love Apple. Now, workhorse, they're like, okay, we're doing good. Let's keep doing the same thing we're doing. No, innovation, okay, growing, being inventive. So they say, you know what? We need to make some contracts. We need to do some deals with other large companies. And that is what they did. And when investors said, boom, now you're talking. Let's buy workhorse, okay? So we're not just looking at the news. We're not just looking at candlesticks. We're not just looking at EPS. We're not looking at price earning ratios. We're looking at every single indicator for us to say, is this really a good stock to buy? And if I buy today, how long do I hold it? Am I a day trader where I'm gonna trade it the same day or the very next day? Or am I a short-term investor where I'm looking like a month or 3 months? Or I'm a long-term investor, I'm looking like for a year or 5 years? Or I'm a lifetime investor and I'm just gonna buy 100 shares of Apple and I'm just gonna keep it. Okay, so those are the questions that you really need to be asking yourself. Those are the questions that you need to be asking yourself each and every time that you guys are investing. What type of investor are you at? Ron Beck says average cost was $7.99. And we're talking about, not workhorse, Blink Charging. We're talking about Blink Charging. Bought at a dip, but it turned out they were accused of fraud. Okay, I remember Clan Killer, he gave me some information about Blink Charging, about a good investment. I did not invest in it because I went through their financials and I saw that it wasn't profitable for me. I mean, I didn't see anything dealing with fraud, but it just wasn't there for me. You know, Warren Buffett says that before he invests in a stock, he needs to know a lot of information about it. He needs to be familiar with that industry. And I am the same way. We need to learn from those people who are making good money, who have made good money from investing. Would it be Warren Buffett, Ray Dalio, Jack Bogle, those moguls in the investment space, okay? Those moguls in the investment space, because this is how we need to learn and this is how we need to invest. Ron Beck said, I just clicked on expand and got candlesticks. On the desktop? Because mine doesn't do that, okay? Nolan Baptiste, thank you, good sir. Thank you for putting the word out there. Please like and subscribe and share. Okay, ladies and gentlemen. Again, I have to prepare for my next video. I'll be coming on back in 10 minutes. I think I'm going to hop over to Zoom. Sometimes it's a better platform. I don't know. But anyway, ladies and gentlemen, this is Financial Literacy 101. Learn money and be inspired. In Robinhood, I am not happy with you people today. I'm out.